right.
Um, so if we don't have any questions, maybe what I'll do is come back to this uh, on the options, the single leg dashboard. And we talked about it a little bit earlier. Um, let me just close this menu to expand the screen. And what this particular page does is it looks at all the options trades on in the stock that you select, and then it puts the options trades into buckets where you have single leg trades like buying or selling a call or put, and it separates those from the multi-leg trades and contingent trades. And then once it isolates those single leg trades, it performs different analytics on those trades so we could get some, you know, uh, insights and a summary of some of the metrics that we're calculating. And I think that we kind of went over the top four. Uh, we covered up to the volume by condition. So let's just go and continue looking at some of these other summary metrics. And one of them is looking at the trade price relative to where the bid and the offer or the quote was relative to where the price of the trade occurred. So the idea there is to see how the order flow was in general coming in. Was the order flow in general getting the trades getting executed mostly on the ask side of the quote, on the bid side of the quote, in between. And this gives us a breakdown. So we could see that 38% of the trades were on a bid, 38% of the trades occurred on the ask side. So that's that's balanced, right? You have equal amounts on the bid uh, and the ask in the percentage terms. So another thing we could look at is if there were any trades that occurred below the bid or above the ask, because that would indicate an intermarket sweep order. Right? An intermarket sweep order can bypass the MBBO. So an intermarket sweep order goes and tries to sweep the book, top of book, on multiple exchanges simultaneously. And when that happens, that means that you can trade through through a quote or displayed quote that is part of the MBBO. Basically, bypass that Reg NMS rule. And we could see that 2% of the trades occurred below the bid and 2% above, which is basically even. But what that would indicate is that if it's below the bid, that indicates that there is an intermarket sweep order to sell, right? Because if you sell using an intermarket sweep, that's a specific order type. You could bypass that Reg NMS and sell it below the displayed bid. And on the other side, if it's above the ask, that would indicate an intermarket sweep order to buy an option, because then you could bypass the Reg NMS and pay a higher price than displayed because you want to access that liquidity on a different exchange that's not part of the MBBO. So those are pretty even here and represented, in total 4% of the volume, 2% on the bid side, 2% on the ask. Then we have oh, I'm sorry, that was the mid. Yeah, then we have the midpoint is where it traded right in between the bid and the offer. And that represented 18% of the traded volume. And that indicates to us that there's a decent amount of liquidity in there where there's an opportunity to get an execution that's in between the markets. In other words, you have a displayed market, a bid and an offer, but you have an opportunity to get a better execution than the displayed prices, right? So if you have a dollar bid, a $1.10 offer, well, there's an opportunity there maybe to get executed at $1.05 on either side, right? If you're selling, you want to sell higher than $1. If you're buying, you want to buy lower than $1.10. So this kind of indicates to us how the trades have been executed relative to the displayed quote. All right, so let's go on now to the next piece of information. Now we have these notable trades. Okay, so the trades are a little bit different. You'll see we have top 10 most active options and then notable trades. So the active options, those are aggregating all the traded volume in that particular option. Okay, so that will include, all the trades from that are accumulating from the start of day. But notable trades are just looking at larger trades within that. Okay, so even if you have a lot of volume, they could be a lot of small trades that added up. This is looking at notable trades, the largest, what appears to be the largest trades. Okay, and so you can see there's a difference here. And this allows us to kind of look really quickly at the top 5 to see if we notice something, interesting, unusual pattern, what's going on. And along with the option and the traded volume and the volume weighted average price, we also have an indicator here that we are inferring based on the trade, if the incoming order looked like it was incoming from the buy side or sell side. All right, so if you're thinking like when we look at the markets, usually we think of it as market makers and market takers. Market makers are providing liquidity, market takers are taking the liquidity. So that's how it's looking at it. So here we kind of could scan here, and we have a mix of bought and sold. So there's nothing there that sticks out where they're all to one side, like buying premium, selling. So there's a little bit of mix there. Out of the 5, 2 of them were October 9th, which were the expiring options. So those are 0 DT, but 3 of them were options that have longer term expirations. One of them you have an October 18th, October 31st, and then you have one January 17th in 2025, right? So this would be already a leap. And we could kind of see, well, what quickly we think happened. So the January 17th, it was a 620 call, right? So it's right now the stock's 577, the strike. So this is a call strike that's above where the stock is trading. And it looks like 16,000 contracts traded for an average price of $2.85. And it was coming in from the sell side. Okay. And if that is something that may be interesting to you and you want to research further, if you click on this link, it'll take you to the options chain, and then you could go ahead and dig deeper into that option, into that trade, and so forth. The other ones, October 31st. So that's at the end of this month, where yesterday was October 9th, looking at October 31st expiration. the 540 put, so you can see that 540 put is below where stock's trading now, 577. So this would have been a downside put. It looks like that traded 6,467 contracts for an average price of $1.34. And it appears to us that it was coming in from the sell side. Okay, so it looks like a large trade coming in from the sell side in that out of the money put. So a couple things here, that could be interesting. One is it kind of establishes, big trade kind of establishes a fair value or price discovery, because you have very big trade where you found both sides willing to trade at, right? So we could go look at it. What was the implied volatility? Where was the stock price? So forth. So it gives us an idea of price discovery. Where's the fair value? Where are, larger institutions, market maker specialists, where are they willing to trade with each other? So that helps us with the price discovery. Another thing, just looking at it, is, well, if I was considering, let's say, buying a leap that was a call that with a price higher, like let's say I thought, well, you know what, SPY, maybe, we'll go to, and I'm just making this up, but if my vision was that SPY is going to be $650 by January, well, actually that isn't a leap, right? January 2025 would be a couple months from now. Sorry. Right. Well, because that would be,
Yeah, no, it's a leap.
so
It's a leap that's turned into just a regular
yeah, it's
expiration.
a regular, right. So sorry, that isn't a leap. My mistake. So that because we're in October, that's not a leap anymore. I was just looking at the difference in the year, so that's not a leap. So, but let's just say, that in my mind, I did this analysis and I followed this particular stock, and I think that there's a good chance, like, that it's in the next 3 months it could be at 650 from 5 cents to 650, that it'll be up, whatever that is, 12%, whatever it is. So if I think that there's a good chance, probability, a high probability, and I'm looking for an out of the money call, then here to buy, I could see that there's already a price that was established at, with a big trade. Somebody's coming in from the sell side, so there might be an opportunity there to also participate in, try to put in a bid where you may be able to get at that level, right? There's already an indication there people looking at that option, willing to trade it. And now you have an established level that you could potentially execute a trade, right? And you might be, on the side, whatever, on one of the side. Of course, you know, even on the sell side, if you're looking to sell and that you have an established price now that you may be able to use as reference when you enter in your own order for execution. Okay. Um, so similarly to this, if you're looking to buy puts and you're like, well, there's a seller here, let me see if this is a put that I might be interested in participating, knowing already that there's that a lot of, a big trade happened, big volume, and now based on that volume, I could use that information to, assess the price discovery, right? That where they're pricing that option, where they're willing to trade, what was the implied volatility, what did the option do afterwards, and perhaps that could be an opportunity to say, well, that might be a option worth considering if you're looking to, buy a put or even sell them. You have that information now in front of you. So that's really quickly just to scan, see if there's anything particularly unusual, if there's, is there a particular expiration that large traders are targeting, a particular strike, maybe option type like calls, puts, are they coming in all one way where they're targeting, and they're all coming in what appears to be either from the buy side or sell side, and also gives you information if you're looking for something to do, you have would those top 5 trades, meet those conditions that you're looking for, and then you could go analyze them further. So moving forward, now we got the volume by delta. So those would be the notable trades. Now we got the volume by delta. So this looks at the distribution of volume to see, in essence, okay, if we could separate the calls and the puts, right? So now we couldn't, so that would be easy, separating the calls and the puts. So here we have the calls in yellow, the puts in blue. But then another question would be, where's that order flow coming in relative to the strikes at the time of the trade, right? So if you look at when it traded and where the stock price is at the time, because the stock price can move, so you could have a call that's at the money, it traded, but by the end of the day, it could be in the money or out of the money. But where was the strike relative to the stock price at the time of the execution? Like where were people, targeting their trades or concentrating their trades? So we could split that up into buckets. One is we could look at, is the relative to the at the money. So are the trades close to at the money options? And we could do that by delta by saying, okay, it has to be, obviously a 50 delta would be in at the money, but you're not going to, but you have strikes around that 50 delta that could qualify, we'll say, at, around at the money. So what we do is we take it, from 50 up to 25 delta or down to 75 delta. So around the at the monies. And here we could see that the majority of the trades, just looking at these bars, were around at the money options. So that's how most of the traders were using these options to trade around at the money. More puts than calls. So 24% of the volume were in calls that were around at the money, and 28% of all those trades were in the puts that were close to at the money. What about the tails? So the tails are now options that are further away from at the money. When you have the 24 delta, 23 delta, 22 delta, so they're already a little bit further away. And we go up to 10 delta, right? So it's like from between 25 and 10 delta. Those are a bit kind of wings where you're like, yeah, they have some delta, so they'll have some sensitivity to price changes, but you need the stock, to move closer to them, to really get those into in the monies. So we call those tails. Oh, I'm sorry. Those are wings. So sorry, not tails, wings. Those are wings. So the wings are those that are between the 25 and 10 delta range. I think actually 25 and 5 delta range we might have it at. So those, need a little bit more movement for the stock to really get there. And here we see that 7% of the trades were in the call wings, 15% were in the put wings. Then we have the tails, and the tails over here, those are already relatively far out of the money based on the delta. Like, you really need the stock to move significantly relative to its, implied volatility that to those for those to go into the money. So that they have a much lower probability of being in the money. Okay, I think we have it at less than 5%. Okay, so like 5 delta, 4 delta. So these are like already where you maybe need something shocking or surprising or for those to go in the money, based on today's implied vols. So here we see 7% were in a calls, and 16% were in a put options that we consider tails. And then in the money are just options over here that are already like pretty deep in the money, 95 delta or higher, 1% were in the calls, and 1% were in the puts. Okay, so you can see here, most of the volume is around at the money, which gives us an idea where the order flow's flowing, and if there's anything unusual, or if we're looking, or you're looking to do something, and you're interested to know, well, is there enough trading around at the money? Or if I'm looking at wings, what kind of volume is there? That's a quick way to just see it visually in the graph. So we're right up at 9:30. I'm going to stop right there.
Yeah, that was awesome, D. Thank you very much. Everyone enjoy their Thursday. Thankfully, everyone's safe in Florida on the chat, which is always awesome. Great job, D, as always. We'll see you tomorrow, buddy.
All right. Thanks, everyone. Have a great trading